Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. This week I want to talk to you about trading indicators. A lot of us have the misconception that trading indicators are somehow a no-no to use when you're trading. Now admittedly, as you become more proficient as a trader and you begin to recognize market formations more accurately, you'll find that you don't need trading indicators as much. However, they can still be very helpful. Now, trading indicators are not a be-all, end-all. As you probably know, trading indicators tend to lag. And that's because a trading indicator is nothing more than a mathematical algorithm based on past price history. The idea being that somehow the indicator will translate what's been happening in the past, thereby giving you a clue to what might be happening in the future. The nice thing about trading indicators is that if you use them correctly, they can actually help you make a decision, and making a decision is what trading is all about. So let's take a look at ADX. ADX is a very confusing indicator for a lot of people, but I really like it. It's one of my favorite indicators to use. It can be extremely accurate once you learn how to read it. Now, let's just go over ADX very quickly. For those of you unfamiliar with ADX, you'll notice that it comprises of three squiggly lines. And what these lines are, I'll take them one by one. First, we'll deal with, well, why don't we do the green line first? The green line is what is known as positive DI. DI stands for directional index. ADX is the average of the directional index. So you have a positive DI, which shows bullish price pressure. Then you have a reddish DI, which is negative DI, and that shows bearish pressure. Now, all you need to really know about interpreting ADX is that whichever line is on the top, that is the market force that controls the market. So in this instance back here, where the green line was above the red line, the bulls control the market. Here, where the red line is above the green line, the bears control the market. Now, there is one other line that is normally plotted with the DMI lines, and that is your ADX line. And the ADX is an average of the two. I've turned my ADX into a dotted line here, but very often it's a solid blue line, or depending on your software, sometimes it might be a black line. Now, ADX functions a little differently from the positive and negative DI lines, where it's an average, and what it shows is building and declining price pressure. So when you have ADX rising, as it did here, that shows the prominence of a trend building. When ADX is falling, that usually shows that the trend is weakening. So here we have ADX rising, and you can see prices fell off very sharply. The red was above the green, so we knew that the bears had control of the market, and you can see that the ADX continued higher, suggesting that, in fact, this trend would continue, and it did. It fell off quite sharply for a couple of weeks there. Now, the important thing to remember about ADX is that it is non-directional. It only shows pressure. So when ADX is rising, whichever market force is on top will control the market. So you will have rising ADX in a bear market, you will have rising ADX in a bull market. So don't be confused thinking that if ADX is declining, that is showing the bears are taking control, and if it's rising, the bulls are taking control. That is nothing of the sort. It merely shows you market pressure. So the way I like to use ADX is a bit of a confirming tool. Oh, just one more thing. I'm sorry, before we get into how to actually use it. The standard settings for ADX are normally 14 and 8. Now that's a 14 period DI. So these red and green lines would go back 14 periods, and your ADX, which is an average of them, is usually set at 8. As you know, I'm a big fan of Fibonacci numbers when it comes to setting my indicators, so I actually just rounded it down a little bit and went with a 13 and 8 setting. It doesn't speed it up all that much from the standard settings, so not to fret if your particular software does not offer you this option. But if you want to duplicate what I'm doing here, you can set yours to 13 and 8. Okay, so now how to use it? Well, how I like to use it primarily is to help me reinforce who is in control of the market and which way I should be looking, whether I should be looking to buy or sell. And as you can see, sometimes when we're looking at the price action, if the market is bouncing off of trend lines and such, or if prices are intermingled with the moving average lines, it's not always clear who has control of the marketplace. But sometimes by looking at your DMI ADX indicator, you can get a better notion of who controls the market, especially when you see something like this. You see what we have happening currently here on the DMI ADX is we have ADX beginning to rise. And that would suggest that we have the building of a trend. Now, whenever I see this happen, I usually try to wait for the first pullback phase and buy or sell accordingly, depending who is in control of the market. So that's what I'm doing here right now. I'm waiting for that pullback to occur. But let's take a look. Let's say you were looking to, well, let's back this up a few days so that you can see what it would look like. Okay, here we are. We're bouncing off of the trend line, and we're wondering, well, should we buy or should we sell? The market is technically very neutral. Our moving average lines are all intertwined. We're bouncing off of a bearish trend line. We're bouncing off of a bullish trend line. Which way should we go? Well, if we look at our ADX indicator as the market ticks day by day here, we can see that the green line is above the red line, suggesting that the bulls have a very slight edge in this market. So while you could still set up to sell here below the current support, or wait for resistance to come in and then sell resistance, by looking at ADX, you might say, well, perhaps this market is actually going to rally from here, hold the support, and bounce higher. In which case, you could certainly buy as the market tried to head lower and failed, especially when you start to see some separation here. This is a very good sign. I like to see the lines start to separate like that. That makes me much more bullish. I would be actually pretty keen to buy off of this support that we have here, the support being our red-green bar combination. And then, of course, the market did continue higher for the next little while. So those are the things that I look for when I'm plotting ADX and DMI on my chart. I like to see the lines begin to show some separation. I like to see ADX begin to climb. And I always pay attention to which line is on top. Now, bear in mind that it is a lagging indicator. Sometimes, if I have a good reason, I will disregard what ADX is telling me and will perhaps buy or sell based on the price action. So for instance here, back here, you can see we hit the trend line, we got resistance. I don't remember if we sold this one or not, or we may have sold a related market, but if you follow the cursor down, you can see that according to DMI, the bulls were in control of the market when in fact for the next 3 days, prices actually headed lower, and we would have been able to round up a tidy little profit there over the next couple, 3 days of trading, even though it was short-lived. So just a little something to keep in mind when you are trading with indicators. Don't disengage your brain, okay? They're just tools, and they are all mathematical algorithms. You may notice I do have a 25% line here on my ADX DMI indicator, and that's because it is a relative scale. It's plotted on a scale of 100, and generally speaking, anything over 25%, so when ADX begins to rise and get above 25%, most analysts consider that to be a trending market. And once ADX gets above 25%, then most people are on the lookout for a bit of a pullback phase, a sign of support or resistance, and a reason to get into the market. Some traders like to raise it higher. They'll go as high as 30 or even 40%. I think that's a little bit too high, especially in futures. I don't think that you're giving the market enough of an opportunity in that case, because you can see by going back in the chart, it's very rare that the ADX, which is the blue line, gets well above the 50% level. When you're trading intraday and you're using this, sometimes you will see the ADX get as high as 70 or maybe even 80%. So if you're using it intraday, you may choose to raise your trend level from 25 to 30 or perhaps even 40. But for me personally, I run it at 25% across the board, whether I'm trading end of day or intraday. So that is how I use DMI and ADX to help me in my trading. I pay attention to which market force is in control. I pay attention to see if the lines are beginning to separate to show some sort of strength one way or the other. And I pay attention to my ADX average line to see whether or not there may be a trend building. And that's this week's Tricks of the Trade.